Good day, folks. I want to have a quick look at currencies. I didn't get to this yesterday because I was busy doing other things, and then there was rugby on. I had to watch the Rugby World Cup game, South Africa against Tonga. So I got through stocks and commodities, but not currencies. I'm going to spend 5 minutes on this right now. Let's have a look at the dollar index. Now, what the dollar index, remember, is an index. It's a basket of currencies that goes into this number. So this is reflecting the moves that we see on the euro and the pound and the Japanese yen, mainly weighted towards the euro and the Japanese yen. So what we see on the dollar index is reflective of what's happening in those markets rather than probably the other way around. We're seeing the dollar index moving up a little bit after a big reversal last week. Quite a convincing engulfing candle actually a few days ago. That was on Thursday. We didn't quite get up to this Fibonacci level at around about 107, and there's a chance we could still try and reach up there. That's the 50% fib of the entire move down from this 115-ish level down to below 100 over the last period. So that's halfway if we get up to 107. 107.15. I think that's quite a good resistance area. We may not even get there. We've just sort of poked up towards that level, and we've had that reversal candle, so we're sort of in a holding pattern right now. So with that in mind, the idea that the dollar index could go a wee bit higher, but it might not because we've had this sort of reversal pattern taking place. Let's have a look at the individual currencies. I'm going to look at some of the majors. So we don't really want to be buying the euro and the pound, the Aussie dollar and so on until we see the dollar index sort of topping out. We may have seen the beginning of that so far, but it's not all that convincing. So we might see a little bit more downside on the euro and the pound. However, we did see quite a convincing reversal off the bottom of both of these. These are 4-hour charts. If I switch these to daily charts, you can see that these are sort of daily reversal patterns going on. Let's have a look at them individually very quickly. And this is the euro. We saw the same engulfing pattern on the euro that we saw on the dollar index. This is also a tweezer bottom candle, and this is a very powerful reversal. I kind of like this, but we have pulled back quite significantly, probably only to 61.8%. So this level that we're at right now on the daily chart on the euro at around 1.0540 might be the bottom of this move for now. If we go back to the 4-hour chart, what we're really looking for is a 4-hour reversal candle. And in fact, I can put that Fibonacci in from the bottom up to the recent high. I said it was probably 61.8%, and yes, it is exactly 61.8%. So that's a good area to look for potential reversal in the euro against the US dollar and for move higher. Same sort of thing on the pound, and this is the pound daily chart. You can see we made an attempt to rally off, not quite the sort of same convincing reversal pattern that we saw on the euro and the dollar index. It's a bullish candle, it's engulfing, but it's not a classic reversal pattern. On Friday we saw a spike high, a doji candle, and we've pulled back more sharply than the euro. Yeah, not as convincing, I think. So we're looking for 4-hour reversal candle patterns, and we're not seeing that on the pound either. So both the pound and the euro probably at decent support levels, but so far the momentum's heading down, and we've got no reason to be buying those just yet. And also on the dollar index, we're seeing that's moving up. So that's the majors. Let's look at the yen pairs. Now, here we've got all the yen pairs. The good news for those buying yen in general is that we're seeing the yen strengthen against the euro and the pound and the Swiss franc, the Canadian dollar, and the Australian dollar. We're not seeing it strengthen against the US dollar. We're not going to see all of these move down significantly until this one in the top left-hand corner makes its move, and that's the dollar against the Japanese yen. We want to see this one moving down. So with that in mind, let's have a look at this chart a little bit more closely. This is a 4-hour chart on the dollar Japanese yen, and you can see this rising wedge pattern. I pointed this out before. It's a significant bearish reversal pattern actually. It's a rising wedge, and if you have a look at the MACD and the RSI and the stochastic, you'll see they're all showing divergence as well, which is typical with a rising wedge because it's clearly running out of momentum, and the upside is slowing down and the underside is sort of keeping pace. So this top gradient is slowing down. In other words, it's less steep, and that forms this rising wedge. Now, if we have a look at this on the day chart, you can see the same sort of pattern there. There's the rising wedge on the day chart. You can see how we're running out of momentum. We do have a channel top above us, and that line now is at around about 151.50. We're just below 150 at the moment, and that channel's drawn from this much longer term picture. There you can see it on the day chart, but it's better seen on the weekly chart. So there's this long-term channel on the weekly chart, and you can see we're just reaching up towards the top of that channel, which would be at around about 151.50. We've seen a lot of talk from the Bank of Japan today again, first of all saying they're watching the currency movements closely, and then about an hour ago, Ueda and a couple of the others said they're watching the currency movements with a great deal of urgency. see. And we know that 150 is their sort of line in the sand. We're just below that at the moment. So whether they're going to take action or whether they're, as they call it, jawboning, is going to do the job or not, I don't know. Or whether the markets will just naturally come in if the dollar starts to lose some strength, and we see the euro and the pound pick up strength and the yen pick up strength at the same time. So all of those factors will play into this Bank of Japan intervention, this technical long-term channel, the rising wedge that we see on the day chart and on the 4-hour chart. That's the day chart. And the 4-hour chart showing the same sort of thing. We'll have to wait and see. I think overall though, and I don't have the stochastic and the MACD and the RSI on here, but you can see there's very clear divergence on there. When you get a rising wedge with clear divergence, and particularly on the yen pairs, bear this in mind, and we see it over and over and over again, and this pattern, this rising wedge pattern, is prone to sudden breaks. What you often see is when there's some sort of jitter in the market or intervention, verbal or actually physically by direct intervention in the markets, then we see these patterns crash very dramatically. And we've seen it time and time again on currency pairs with the yen, like the pound yen, the CAD yen, the Australian dollar yen, and you see these patterns occur over and over again. And it's because of the nature of the interference and the intervention in the market and the resilience of those sort of upper levels that are determined by the officials in Japan. So we know 150 is being approached very cautiously, so the momentum upwards slows down, and then suddenly you get something that happens, like I said earlier, and the market crashes through this technical pattern, which in itself is prone to very dramatic collapses, very sudden moves as the market gets squeezed into that corner. So that's the picture on the yen at the moment. We're short across the board on all of these, but a lot of these positions that I've got are pretty well hedged. But in my trading group, we've got into the pound yen and the Swiss yen, and those are starting to move down quite nicely. We haven't got additional positions in on the euro yen, the Aussie yen, and the CAD yen just yet, but really what I'm looking for is a signal on the dollar yen and a collapse down through this trend line and through this swing low. Let me just point out, this would be a good clear signal to start getting more interested in selling when we break down through this swing low here at around about 148.50, which would also take us below the bottom of this rising wedge pattern. We'd want to break down through those levels. It's also the 50-period moving average on the 4-hour chart, and then a retest from underneath, a back test, and the back test is the time that we want to be selling, not on the initial break, because the initial break could follow through with quite a lot of momentum. Don't be fooled by that. Wait for the back test, the retrace from underneath, a touch and go, and then a move down. That's the currency pairs view today. Have a fantastic trading day, and I look forward to seeing you in the next video. If you enjoyed this, please give it a thumbs up, and if you're not subscribed to this channel yet, you should be. Press the subscribe button.